Hi, so I was able to do the recording for the general principles of taxation yesterday. Now I'm planning to start income taxation, and this will be a longer topic. So I hope until tomorrow I can finish this. Okay, so let's start. Gross income. What does it mean? It means all income derived from whatever source, including but not limited to the following items. I'm just gonna read them all. Compensation for services, gross income derived from conduct of trade or business or exercise of a profession, gains derived from dealings in property, interests, rents, royalties, dividends, annuities, prizes and winnings, pensions, and partners' distributive share from the net income of the general professional partnership. Okay, so those are the items of gross income, but those are not the all. Other items may also be included. Gross income. Para sa ng gross income, ito yung tinatawag natin, di ba, yung meron tayong schedular system na kung saan yung iba't ibang klaseng income ay merong iba't ibang klaseng rate. So dito, tatanggalin mo lang yung mga passive income kasi may nabanggit ditong interest, tapos dividends, tapos prizes and winnings. Pero kung individual yung pinag-usapan, hindi siya dapat kasama sa gross income. No, ihiwalay mo lang yung mga passive income. Tapos yung mga, yon. Tapos, ang goal kasi natin is makuha yung taxable income. So, now, let us take a look. What is taxable income? Taxable income means gross income less deductions and or personal exemptions. So, yun. Gross income minus deductions and or personal exemptions is equal to taxable income. However, upon the implementation of train law or enactment of the train law, wala na tayo ngayong personal exemptions. Pero dito sa book na binabasa ko, meron pa rin. I-adjust ko na lang kung ano yung mga outdated na information, okay? So, after this, we're gonna talk about the special rules on gross income. This will include both for corporation and for individuals, and then we'll tackle each item one by one. What if the dividend income is from a resident foreign corporation received by a domestic corporation? The rule is that this is taxable as part of ordinary income. So, part of gross income siya, subject to corporation para to hindi graduated rates, 30% income tax. Yung regular income tax. So, that's all for dividend income. Yung transportation allowance is for your travel from Makati to Ortigas, wherein ang purpose mo going to Ortigas is to meet a client, no? So from your office to the meeting place with the client. That would be not part of your compensation income since that is in pursuance of trade or business or profession, according to our reference here. So yun. May general rule tayo pagka allowances with regard to transportation and representation, that is taxable as compensation income subject to limited or exceptions. Ito pa pala, may pangatlo, no? Pagka binigyan ka ng allowance pero kailangan mong ibalik sa company, reimburse or for kailangan ka mag-liquidate, then that would not be part of your compensation income kasi binigyan ka nga ng transpo allowance pero babayaran mo rin naman. So, hindi kasama yon. There's an additional info here. The excess of advances over the actual expenses incurred is treated as taxable income if such amount is not returned to the employer. So, pagka yung sukle, hindi mo na kailangan ibalik sa employer o kaya sinabi ng employer, huwag na ibalik o kaya ikaw mismo hindi mo binalik, that would be part of your taxable income pa rin. And next one, vacation and sick leave allowances. Pagka non-government employee, taxable siya except for monetized value of unutilized vacation leave credits not exceeding 10 days. Pero pag government employee naman, lahat ng monetized value of unused vacation leave credits, wala nang limit na 10 days, lahat-lahat ay exempted from compensation, being part of compensation income. So that's it for transportation, representation, and other allowances received by officials or employees. Next one, we have condonation of debt. Kailan to nagiging part ng gross income? If the debtor rendered services to the creditor, this is taxable as income to the debtor. Okay? Kunwari, may utang si A kay B. Ngayon, hindi makabayad si A ng utang kay B. Ginawa ni A, nag-offer siya na maglinis ng bahay ni B. For, like example, for the whole week, siya yung maglilinis. And pumayag si B, sige yan na yung bayad sa utang mo. Then, the condonation of debt of A to B is treated as income of A kasi siya yung debtor. Okay? Next one. What if there are no services rendered? The treatment is that it is taxable to the creditor as gift given to the debtor. Yun. Pagka si A naman is kinondone yung kanyang utang kay B without any service rendered by A, then that is like donation, no? Donation yung nangyari. So, magbabayad ng donor's tax si B para doon. Siya na yung liable naman ngayon. In contrast dun sa merong services na ginawa si debtor. Next one. What if the creditor is a corporation while the debtor is a stockholder? The treatment is that the condonation has the effect of a payment of dividend. So, para siyang dividend pagka kinondone yung utang ni stockholder from the corporation. Dividend. Sa bagay, kasi naka-receive ng benefit si stockholder. So, if you're gonna think about it, parang yung pambayad ni stockholder, yun na lang kapalit nung cash dapat from the dividend. No? Next one. What if the creditor is the stockholder while the debtor is the corporation? The treatment is the condonation or the amount condoned is considered as an additional investment. So opposite naman, kung kanina as dividend yung treatment, dito naman additional investment. Kasi yung kanina parang return of capital. Ngayon, investment of capital naman. Additional investment. Pagka si stockholder yung nagpautang kay corporation, tapos si stockholder yung nag-condone nung utang ni corporation. Now, let us deal with the recovery of bad debt previously deducted. what we are going to apply is the tax benefit rule. Okay? Kailan nagiging taxable or not taxable yung recovery of bad debt or yung ating doubtful accounts? Ganito, taxable siya if the deduction of bad debt has reduced the tax liability of taxpayer. Okay, paano nangyari yon? Kasi tandaan mo, pagka sa income taxation, ang kinoconsider lang natin na bad debt ay yung mga write-offs. Hindi kasama yung allowance for bad debt or allowance for doubtful accounts. Though treated siya as operating expense sa ating income statement, for tax purposes, yung allowance for doubtful accounts hindi siya kasama sa deductions. Pero kung write-off yon ng accounts, then that would be part of deductions. So pagka write-off yung nangyari previously, tapos na-recover mo siya, previously nabawasan yung income tax mo kasi naging allowable siya as deduction. So ngayon, since na-recover mo yung ni-write-off mo previously, isasama mo siya sa yung gross income kasi nga meron kang benefit last time, no? Tax benefit rule. Ngayon naman, not taxable yung recovery of bad debt kung sakaling there was no reduction in the liability of the taxpayer previously. Kung sakaling hindi ka nag-write off previously with regard to that debt na na-recover mo ngayon during the current taxable year, then hindi siya taxable kahit na-recover mo siya, kahit i-recognize mo pa siya sa income statement as income, no? But for tax purposes, hindi siya part ng gross income. Okay? So that's all for recovery of bad debt previously deducted. Just remember the tax benefit rule. Now let us deal with dividend income. If the dividend income is received by a domestic corporation from another domestic corporation, then it is not taxable. Domestic to domestic, not taxable. However, if for the next item, if the dividend is received by a resident foreign corporation from a domestic corporation, then it is also not taxable. Pagka resident foreign corporation from a domestic corporation, that is not taxable. Next one, received by non-resident foreign corporation from a domestic corporation, taxable at 30% final tax, 15% if subject to tax-sparing credit. Pagka domestic to non-resident foreign, then taxable at 30% final tax, and then subject to 15% if the tax-sparing credit is applicable. So let us now try to understand what tax-sparing credit is. Ito, sabi, tax-sparing credit is a term used to denote a special form of double taxation relief in tax treaties with developing countries. Naalala mo yung multiplicity of situs and yung indirect double taxation. Apply mo yun dito, ha. Where a country grants tax incentives to encourage foreign investment and that company is a resident of another country with which a tax treaty has been concluded, the other country may give a credit against its own tax for the tax which the company would have paid if the tax had not been spared under the provisions of the tax incentives. So, for example, Philippines, then meron tayong non-resident foreign corporation na nag-invest sa atin, sa Philippines. So ngayon, since we are offering incentives, tax incentives to foreign investors, pwede tayong magkaroon ng kasunduan dun sa domicile country nung non-resident foreign corporation. Kunwari, yung domicile country niya is Japan. So, nagkasundo na since we are providing you tax incentives, what if you could also provide our um, investors from the Philippines, if we go to your country, provide us with credits, tax credits, yung tax sparing credit. Since hindi namin tinaksan yung investor galing sa bansa nyo for this percentage, what if kami naman yung hindi nyo taksan ng for this percentage doon sa bansa nyo pag kami naman yung nag-invest sa inyo? So, yun yung tax sparing credit. Hindi nyo tataksan yung companies namin dahil in-spare namin yung babayaran sana nung company nyo if ever walang incentive. Okay? So, that is tax sparing credit. And remember, 15% yung rate ng dividend income if ever merong tax sparing credit. Pero kung wala, 30% for non-resident foreign corporation. What if the dividend income is from a resident foreign corporation received by a domestic corporation? The rule is that this is taxable as part of ordinary income. So, part of gross income siya. Subject to corporation para to hindi graduated rates. 30% income tax. Yung regular income tax. So, that's all for dividend income. For the next concept of gross income items, we have tax informer's reward. So, as a rule, this is subject to 10% final withholding tax of rewards received. 10% of the amount collected by the government, which shall not exceed 1 million. So, ayun pala, no? Sa tax informer's reward, kunwari, ang nireport mong hindi nagbabayad ng tax for 500,000 na yung tax payable dapat. Tapos na-report mo. Tapos nakapagbayad ng 500k yung nireklamo mo. So 10% nun yung iyong tax informer's reward. Pero kung sakaling 12 million yung na-report mong tax liability, tapos nakapagbayad ng 12 million, hindi pwedeng 1,200,000 yung tax informer's reward kasi sabi, it shall not exceed 1 million pesos yung tax informer's reward. So pagka ganon, hanggang 1M lang. So yan yung tax informer's reward. Ngayon naman, dumako tayo sa rules on lease contracts and leasehold improvements. The treatment for rent for the use of property is taxable income to the lessor but deductible as expense to the lessee. Deductible expense to the lessee. So yun, nagbayad ka ng utang as the lessee, ikaw meron kang deduction. Yung binayaran mo si lessor, merong taxable income or part ng gross income niya yun. Next, taxes assumed by lessee on behalf of the lessor. This constitutes additional rent and taxable income to the lessor. Kunwari, yung real property tax binayaran ni lessee. So, additional rent expense yun for lessee, deduction, and additional income kay lessor, taxable additional gross income niya yun. Next naman, if leasehold improvements on leased premises will go to the lessor upon termination. income to the lessor which may be reported under either outright method or spread out method. So kung meron kang leasehold improvements, yung kunwari, office space siya, pero ginawan ng mga partition ni lessee. Yung partition, yun yung tinatawag na leasehold improvements. Additional income yun kay lessor and deductible as expense kay lessee. Hindi, walang sinabing deductible expense kay lessee. Okay? Pero mapupunta siya kay lessor upon termination of the contract. Yun yung case natin. Pero kung hindi siya mapupunta kay lessor upon termination of the contract, dapat hindi siya maging income ni lessor kasi wala naman siyang pakinabang doon. Kung gigibain din upon termination yung mga partition, then hindi siya part ng income ni lessor. Ano yung sinasabing outright method and spread out method? When you say outright method, the fair market value of the improvements in the year of completion is reported as income. Yun yung outright method. Parang ano siya, lump sum. Isang beses, income na lahat yung leasehold improvements para kay lessor. Next naman is spread out method. The book value of the improvements at the termination of the lease contract is spread over the remaining term of the lease. Ito, tanda mo yung pinagkakaiba. Yung sa outright method, fair market value at the year of completion yung treated as income. Sa spread out method, yung book value of the improvements at the termination of the lease contract ang basis ng income. And also, it is spread over the remaining term of the lease. So, kunwari, meron pang 5 years na natitira sa lease contract, then divide by 5 mo yung remaining book value ng improvements upon the termination of the contract. Okay, so sumunod is depreciation on the improvements. What are the treatment? The lessee may claim depreciation of the improvements over the remaining term of the lease or the life of the improvement, whichever is shorter. So yun, if ever yung improvements ay magiging fully depreciated na even before matapos yung lease contract, then use the useful life of the improvements. However, if the lease contract will end even before the improvements become fully depreciated, then the useful life is fully exhausted, then use the remaining lease term as the depreciation term. And lastly, we have premature termination of lease. The income to be reported by the lessor shall be computed by subtracting the amounts already reported as income by the lessor from the book value upon termination. Medyo naguluhan ako. Okay. Ayun. So, na-terminate yung lease ngayon. Pre-termination ng lease contract. Ang tinutukoy dito is yung spread out method eh. Kasi kung ito ay outright method, wala ka nang i-consider na ano pang additional income yung kailangang i-recognize ni lessor. Kasi na-recognize na lahat upon completion of the improvement. Pero kung spread out method, yung book value upon termination minus the income already recognized by the lessor during the previous periods, then that is the amount of income to be recognized upon termination of the lease contract. Kung gusto mo, isulat mo na lang siya sa notes mo as book value upon termination minus the income already recognized by the lessor during the previous periods, then that is the amount of income to be recognized upon termination of the lease contract. Kung gusto mo, isulat mo na lang siya sa notes mo as book value upon termination minus the income already recognized by the lessor during the previous periods, then that is the amount of income to be recognized upon termination of the lease contract. income recognized in the past is equal to income to be recognized upon termination. Yun. So that's all for rules on lease and leasehold improvements. Lease contracts and leasehold improvements. Okay, so the next topic on our list is the exclusions from gross income. So ano-ano yung mga exempted from income tax. Not to be confused with deductions from gross income. These are just those that we don't add as gross income. Number 1, proceeds of life insurance policy payable upon the death of the insured. However, it is taxable if the insured outlives the policy. Yun, may life insurance policy. And if ever namatay si insured, yung proceeds nun ay hindi kasama sa gross income. Pero kung buhay pa si insured, tapos natapos na yung policy, and na-receive niya yung proceeds, then part siya ng taxable income or ng gross income. Kasi hindi naman siya namatay. Next one, return of premiums either during the term, at the maturity, or upon surrender of the contract. Alam mo yung premiums. Yung premiums yung binabayaran mo to maintain the insurance policy or to be rightful of the proceeds of the insurance policy. So ngayon, kung binabalik yung premiums during the term of the contract, then that is not part of gross income. Then, the next one is, if ever binalik sa'yo yung premiums at maturity, or binalik sa'yo yung premiums upon the surrender of the contract, kunwari kinancel mo na yung life insurance contract even before maturity, then those return of premiums would also not be part of the gross income. Okay, so number 3, the value of the property acquired by gift, bequest, devise, or descent. Ito yung mayroong niregalo sa yung property, mayroong pinamana sa yung property, then those are not part of gross income, exclusions from gross income. Next one, compensation for personal injuries or sickness received from insurance plan damages. So, pagka ganon, hindi rin yun part ng gross income. Yung, kunwari, na-hospital ka, tapos yung insurance mo, binigyan ka ng pambayad sa bills. So, that would be not part of gross income. Next one, income of any kind which are contained in a treaty binding upon the Philippine government. So, ito yung tinatawag na exemption also. Kasi, yun, may kasunduan ka with other countries na hindi mo tataksan yung ganitong klaseng income ng mga citizen namin na pupunta sa bansa mo. And also, hindi namin tataksan yung income ng mga citizen nyo na pupunta sa bansa namin. Yun yung sa mga treaties. Next, for number 6, retirement benefits or pensions. Hindi siya part ng gross income. Pero may requisites para sa retirement benefits. Kailangan, the employer must maintain a private pension plan which is approved by the BIR. If walang private pension plan, then the retirement benefits will be part of gross income. Next requisite, the employee has been in the service of the same employer for the last 10 years. That is also another requisite. Next, the retiring employee must not be less than 50 years old upon retirement. And lastly, the benefit of exemption can be availed of only once. Anong scenario natin doon? Kunwari, nag-retire si employee noong siya ay 49 years old. So, exempted ba or taxable? Then that is definitely taxable kasi less than 50 years old siya nung nag-retire. What if in another scenario, nag-retire siya when he was 51 years old? Is it taxable or exempted? The answer is exempted kasi he is not less than he is not less than 50 years old. And what if nagtrabaho ulit siya after niya mag-retire when he was 51 and nag-retire ulit siya nung siya ay 55 na? Is it taxable or exempted? The answer is that it is taxable kasi the exemption can only be availed of once. So that's all for retirement benefits. With regard to separation pay, there is also a requirement. The separation of the employee from service must be due to death, sickness, physical disability, or any cause beyond the control of the employee. For the separation pay to be exempted from income tax, those requirements must be met. At least one of them must be met. So examples ng cost beyond the control of the employee: dismissal due to installation of labor, saving device, retrenchment, bankruptcy, and redundancy. So yun, familiar ka ba sa redundancy? Kunwari, may dalawang officers pero same function lang and kaya naman pala ng isang officer lang gawin yung trabaho. So, naging redundant yung position nila. So, nagkaroon ng separation. And yun lang, ulitin ko lang, labor saving device, tapos retrenchment, bankruptcy, and redundancy. Dismissal due to those reasons. Next, exclusion from gross income is prizes and awards given to religious, charitable, scientific, educational, artistic, literary, or civic achievement, provided that the recipient did not join the contest he is not required to render substantial future services. Dapat walang ka-effort kay recipient yung pagtanggap ng prizes and rewards. Tapos yun nga yung mga reason for giving him the reward, dapat religious, charitable, etc. Yun, dapat hindi siya yung nag-nominate sa sarili niya, and also dapat wala ng further requirements or services na kailangan niyang gawin in order to receive the reward or to be entitled for that. Next exclusion from gross income is benefit received by persons residing in the Philippines under U.S. laws administered by U.S. Veterans Administration. So yun, pagka-related yung benefits sa kunwari yung mga veterans na dito na nag-migrate, tapos mga benefits na ganon, dapat yun ay excluded from gross income. Next exclusion ay benefits received from SSS, GSIS, including retirement gratuity received by government officials and employees. So pagkagaling sa SSS or GSIS, whether pension or other benefits, dapat exempted from income tax. Next one is income derived by foreign governments. Those are also exempted from income tax. Next item is income derived by the government or its political subdivisions from public utility or any essential governmental function. Yun, pagka government instrumentality or government units yung nag-earn ng income, then that is also exempted from income tax. Next are prizes and awards granted to athletes in local and international sports competitions in the Philippines or abroad, sanctioned by their national sports associations, and the sport association must be recognized by the Philippine Olympic Committee. So, pagka-atleta, nanalo ng prizes and awards, basta ma-meet niya lang yung mga requirements, 4 yon, then those are exempted from income tax. Next, number 13, 13th month pay and other benefits up to 90,000 pesos. Previously, yung exempted from income tax ay 82,000 pesos only. However, upon the enactment of train law, 90,000 na yung ating exemption threshold or ceiling, parang ganon. Next, GSIS, SSS, Medicare, and Pag-ibig and union dues of individuals. Those are also exempted from income tax. Pero tandaan mo lang, yung exempted lang ay yung mandatory contributions. Hindi kasama yung in excess of those, like yung voluntary contributions. Yun lang yung exempted, yung mandatory. Next, number 15, gains from sale of bonds, debentures, and other certificates of indebtedness with a maturity period of more than 5 years. Exempted daw yon. Pagka more than 5 years, yung maturity period ng bonds, debentures, and other certificate of indebtedness na binenta, kung meron kang gain doon, exempted from income tax. Next one, gains realized by investors upon redemption of shares in a mutual fund company. Gains realized by investors upon redemption of shares in a mutual fund company. Those are also exempted from income tax. And lastly, compensation income of minimum wage earners or MWEs who work in the private sector and public sector not exceeding the minimum in the non-agricultural sector and being paid the statutory minimum wage as fixed by the Regional Tripartite Wage and Productivity Board, National Wages and Productivity Commission, applicable to the place where he or she is assigned, including their holiday pay, overtime pay, night differential pay, and hazard pay. So, yun daw. Pagka statutory minimum wage lang yung in-earn ni employee, then that is exempted from income tax, including the holiday pay, overtime pay, night shift differential, and hazard pay. Gawa ka ng acronym, HONZ. H for holiday pay, O for overtime pay, N for night shift differential, and Z for hazard pay. So those are all the exemptions from income tax with regard to both corporations and individuals, whichever is applicable for each item. Pero parang feeling ko puro individuals lang applicable tong mga to. Pero wala kasing in-indicate kung corporations or individuals. While yung items of gross income, nakahalo yung para sa mga corporation. Pero tingin ko maintindihan mo naman kung para kanina kung corporation ba or for individual. This time, let us delve into more information about individual income taxation. So what are the classification of individual income taxpayers? Actually, we have 5 kinds of individual income taxpayers. Merong resident citizen, non-resident citizen, resident alien, non-resident alien, engage in trade or business in the Philippines. And lastly, non-resident alien, not engage in trade or business in the Philippines. When you say resident citizen, it is he or she is a Filipino citizen who permanently resides in the Philippines. So, yun. Ano ba yung consideration para maging citizen? Those who are citizens of the Philippines at the time of the adoption of the February 2, 1987 Constitution. So, those are citizens. Next, those whose fathers or mothers are citizens of the Philippines. And those born before January 17, 1973, the date of the adoption of the 1973 Constitution of the Filipino mothers, who elect the Philippine citizenship upon the age of majority. And last criteria for being a citizen is those who are naturalized in accordance with law. Ito yung mga ways of becoming a citizen. 4 sila in total. Naturalized, yun yung mga foreigners na nagpa-change ng citizenship, nagpa-naturalize as Filipino citizen. Next, non-resident citizen. So, these are citizens of the Philippines who establish to the satisfaction of the commissioner the fact of his or her physical presence abroad with a definite intention to reside therein. So, citizen sila ng Pilipinas pero meron silang patunay na they are residing outside the Philippines. Ano-ano yung mga pwedeng patunay? At a citizen of the Philippines who leaves the Philippines during the taxable year to reside abroad either as an immigrant or for employment on a permanent basis. And other possible way to become a non-resident citizen is a citizen of the Philippines who works and derives income from abroad and whose employment thereat requires him to be physically present abroad most of the time during the taxable year. What do we mean by most of the time? It is interpreted to mean presence abroad for at least 183 days during the taxable year. So if the citizen resides abroad for more than 183 days, then he is considered non-resident citizen. Next one, other information. A citizen who has been previously considered as non-resident citizen and who arrives in the Philippines at any time during the taxable year to reside permanently in the Philippines shall likewise be treated as a non-resident citizen for the taxable year in which he arrives in the Philippines with respect to his income derived from sources abroad until the date of his arrival in the Philippines. So, what if within the year, halfway or months after the start of the taxable year, bumalik si non-resident citizen to stay for good in the Philippines. Ngayon, ang treatment sa kanya ay non-resident citizen with regard to income derived abroad. Tapos, tama ba? Oo. Income derived from sources abroad until the date of his arrival in the Philippines. Tapos, lahat ng income niya after his arrival in the Philippines, he will be treated as resident citizen na from there on forward. Ayan, kailangan niya lang mag-submit ng proof sa commissioner na intention na aalis siya sa Pilipinas and to reside permanently abroad. O kaya kung babalik na siya sa Pilipinas, as the case may be. Papatunayan niya lang sa commissioner para maging status niya ay resident citizen or non-resident citizen whichever is applicable. Next, resident alien means an individual whose residence is within the Philippines and who is not a citizen thereof. He is one who is actually present in the Philippines and who is not a mere transient or sojourner. But residence does not mean mere physical presence. An alien is considered a resident or a non-resident depending on his intention with regard to the length and nature of his stay. Yan, yung mga hindi citizen ng Philippines pero naka-reside sa Philippines, those are called resident aliens. Non-resident alien means an individual whose residence is not within the Philippines and who is not a citizen thereof. Hindi siya resident, hindi rin siya citizen, so siya ay non-resident alien. Ano naman yung engaged tsaka non-engaged in trade or business? Pagka engaged in trade or business means that the alien is carrying on a business in the Philippines. It connotes more than a single act or isolated transactions. It involves some continuity of actions. Ano ba yung criteria para malaman natin kung engaged in trade or business ba or hindi? Dapat a non-resident alien who has stayed in the Philippines for more than 180 days during any calendar year shall be deemed doing business in the Philippines. So pagka less than 180 days yung stay niya sa Philippines, he is considered as non-resident alien not doing business in the Philippines. So, yun. Tandaan mo pagka sa non-resident citizen, not less than 183 days yung ating binibilang. Pagka sa non-resident alien, 180 days or more. More than 180 days ang iyong criteria for him to be considered as engaged in trade or not engaged in trade or business. Yun lang lahat ng classification of individual taxpayers. For the next one, let us discuss the rules on situs of income of individual taxpayers. Madali lang naman to tandaan. Pagka resident citizen, the taxable income are those earned within and without the Philippines. Pagka sa loob ng Pilipinas or outside the Philippines, taxable yung kanyang income pagka resident citizen. All other taxpayers like non-resident citizen, resident aliens, and non-resident aliens are taxable on income derived from sources within the Philippines only. So those are the rules on situs of income tax for individual taxpayers. Pag may na-encounter kang question talking about exemption, whether personal exemption or additional exemption, just remember that those are not applicable anymore since the enactment of the train law. So, dati meron pang mga pa 25,000 per qualified dependent, pero ngayon wala na yun, hindi na yun kasama sa train law. Exclude mo na yun. So that's all. Just wanna let you know about those so that you will be aware. Kung gusto mong matutunan o gusto mong magkaroon ng idea kung ano yung mga yun para malaman mo kung ignore mo lang ba o hindi, you can just read older textbooks. Nandun naman yung explanation about personal exemptions and additional exemptions. And also yung hospitalization insurance hospitalization insurance, hindi na rin kasama sa train law yun. Abolish na yung provisions regarding those. Alright, so now let us talk about how the income tax is being computed under the train law. So before, there's only one way. You get the gross income minus deductions equal to the taxable income, and then you use the graduated rates that is provided under the NIRC. But now in the train law or tax reform acceleration and inclusion law, tama ba? Yon. Meron tayong tinatawag na graduated rates at 8% income tax rate. So, dalawa na yung ating tax regimes for income tax. Sino yung mga qualified to avail the 8% income tax rate? Number 1. Sino pala yung mga hindi qualified na mag-avail ng 8% income tax rate? 1. Purely compensation income earner. 2. VAT registered taxpayers regardless of the amount of gross sales or receipts and other non-operating income. 3. Non-VAT taxpayers whose gross sales or receipts and other non-operating income exceeded the 3 million peso VAT threshold. 4. Taxpayers who are subject to other percentage taxes except those subject to the 3% non-VAT under Section 116 of the Tax Code. 5. Partners of a general professional partnership since their distributive share from the GPP is already net of costs and expenses. And individuals enjoying income tax exemption such as those registered under the Barangay Micro Business Enterprises or BMBEs, etc. since taxpayers are not allowed to avail of double or multiple tax exemptions under different laws unless specifically provided by law. So ito yung mga bawal mag-avail ng 8% income tax rate. So just to simplify, ang pwede lang mag-avail ay yung mga non-VAT taxpayers na merong business income na hindi lumalampas sa 3 million pesos ang kanilang gross sales or receipts and other non-operating income for the whole taxable year. And pwede rin naman yung mga mixed income earners if ever hindi lumampas sa 3 million yung kanyang gross sales or receipts and other non-operating income with regard to income from business, tapos meron siyang kasama pang compensation income, wala namang problema, pwede pa rin siyang gumamit ng 8% income tax rate. Ang bawal lang is yung purely compensation income. So, pag-usapan natin ano yung treatment pagka purely business or professional income at saka yung paano pagka mixed income earner. So, let's proceed with the income tax rates for self-employed individuals earning income purely from self-employment or practice of profession. Ito nga yung requirement no? The tax rate of purely self-employed individuals and or professionals whose gross sales or receipts and other non-operating income does not exceed 3 million pesos shall have the option to avail of an 8% tax on gross sales or receipts and other non-operating income in excess of 250,000 pesos in lieu of the graduated income tax rates and the 3% percentage tax or the graduated rates as stated in the train law. So dalawa yung choice ng ng purely self-employed individuals or professionals. Either 8% on gross sales or receipts plus other non-operating income in excess of 250,000 or graduated rates. And sinabi rin dito na yung pagka pinili niya yung 8% tax rate, substitute na yon ng graduated income tax rates at saka ng 3% percentage tax. So, hindi na siya magbabayad ng 3% percentage tax if ever napili niya yung 8% tax regime. Paano niya pipiliin yung 8% tax regime if ever siya ay qualified? Unless the taxpayer signifies in the first quarter return of the taxable year the intention to elect the 8% income tax, the taxpayer shall be considered as having availed of the graduated rates and such election shall be irrevocable. So, dun pala, sa first quarter tax return mo, isisignify na pinipili mo yung 8% income tax rate. And if ever, pinili mo na siya, irrevocable na yon. And if hindi mo naman siya pinili, irrevocable pa rin. Graduated rates ka na for the whole taxable year. Additional info, provided that at any time during a given taxable year, a taxpayer's gross sales or receipts exceeded 3 million pesos, he or she shall automatically be subjected to the graduated rates. O pagka lumampas sa 3 million pesos ang gross sales or receipts plus other non-operating income during the taxable year, within the taxable year, automatically kung pumili siya ng option ng 8% tax rate, mako-convert yon to graduated rates. A VAT registered taxpayer regardless of the gross sales or receipts can no longer avail of the 8% option. So yun nga, 'di ba, sabi non-VAT taxpayers lang, tapos i-consider mo yung gross sales or receipts na not exceeding 3 million pesos, yun lang yung pwedeng mag-avail ng 8% income tax rate. Pag VAT registered regardless of sales or receipts, hindi pwedeng pumili ng 8% income tax rate option. On the other hand, a non-VAT registered taxpayer who initially opted to avail of the 8% option but has exceeded the VAT threshold during the taxable year shall be subject to 3% percentage tax on the first 3 million pesos of his or her gross sales or receipts without imposition of any penalty if the payment is timely made on the following month when the threshold is breached. Then the excess of the threshold shall be subject to VAT prospectively, and the 8% income tax previously paid shall be credited to the income tax due under the graduated rates. If you are going to plot this, during the time na hindi pa nag-exceed ng 3 million pesos yung gross sales or receipts, dapat bayaran ni taxpayer yung 3% percentage tax. Tapos, nung time na lumampas na, yung any amount na exceeding 3 million pesos, subject na yun sa VAT. Tapos naman, for the whole year, yung sa final quarter, ang kukumpitin na income tax payable is using the graduated rates. Pero if ever nakapagbayad siya ng tax using the 8% income tax rate during the past quarters or the past periods, then gagamitin yun as credit sa income tax payable. So, hindi pa rin naman mahihirapan sa pag-compute kasi hindi mababaliwala yung binayaran mo for the 8% income tax rate. Taxpayers who are subject to other percentage taxes under Title 5 of the Tax Code as amended, except those subject under Section 116 of the same title, have no option to avail the 8% income tax rate under the law. Okay, so bawal daw pumili ng 8% income tax rate option kung subject yung taxpayer sa other percentage taxes under Title 5 of the Tax Code. Anong ibig sabihin nun? Ito yung mga laman ng Title 5. Yung mga percentage tax on domestic carriers, keepers of garages. Tapos meron pang international carriers, franchises,
overseas dispatch, message, or conversation originating from the Philippines. Banks and non-bank financial intermediaries performing quasi-banking functions. Other non-bank financial intermediaries. Life insurance premiums. Agents of foreign insurance companies. Amusement taxes. Winnings. And so on, madami pa. So pagka pinag-aralan na yung other percentage taxes, sila ay bawal na mag-avail ng 8% income tax rate option. Yung mga subject dun sa mga ganong klaseng tax dito sa Title 5 ng Tax Code. Pero may exemption, yung mga subject sa Section 116. Ano ba ibig sabihin ng Section 116? Tax on persons exempt from value-added tax or VAT. Sabi, any person whose sales or receipts are exempt under Section 109 of this code from the payment of value-added tax and who is not a VAT-registered person shall pay a tax equivalent to 3% of his gross quarterly sales or receipts, provided that cooperatives shall be exempt from 3% gross receipts tax herein imposed. So, pagka exempted sa value-added tax, pwede siyang mag-avail pa rin ng 8% income tax rate kahit na under ng Title 5 other percentage taxes yung kanyang line of business. Yan. So, ito na, last paragraph for the purely self-employment or practice of profession income earner. Likewise, partners of a general professional partnership or GPP by virtue of their distributive share from GPP which is already net of cost and expenses cannot avail of the 8% income tax rate option. So, bawal din yung mga partners ng GPP to avail the 8% income tax rate option because yung kanilang share in the income of the GPP is already net of cost and expenses as provided here. Kasi nga 'di ba yung 8% income tax rate ay ina-apply natin sa gross sales or receipts and other non-operating income. Yun yung pinagbabasihan natin. Alam nga naman i-work back mo pa yun na nga yung share nila per partner dun sa income ng GPP. So, that's all for the income tax rate options for self-employed individuals earning purely income from self-employment and practice of profession. Now, what are the income tax rates for individuals earning income from both compensation and from self-employment, whether business or practice of profession? Paano yun? Kasi dalawang klaseng income meron siya. Di ba sinabi, yung purely compensation income earner ay bawal mag-avail ng 8% income tax rate option. So, para doon, yung kanyang compensation income shall be subject to the graduated tax rates. While the income from business or practice of profession shall be subject to the following. If the gross sales or receipts and non-operating income do not exceed the VAT threshold, the individual has the option to be taxed at either the 8% rate option or the graduated tax rates. Pagka pinili niya yung 8% tax rate option, then that will be in lieu of the graduated income tax rates and the 3% percentage tax. Provided that hindi nga lalampas sa threshold yung kanyang gross sales or receipts and other non-operating income from business. Tapos pwede rin naman yung piliin yung graduated income tax rates din for the income from business. Tatandaan mo lang, pagka purely business income lang, kino-consider pa yung 250,000. In excess of 250,000 na gross sales or receipts and other non-operating income, yun yung minumultiply sa 8%. However, pagka mixed income earner, hindi mo na sinasama yung 250,000 sa pag-compute, hindi mo na binabawas doon sa gross sales or receipts and other non-operating income kasi na-avail na niya yung 250,000 na exemption when the taxpayer was able to apply the graduated rates in his or her compensation income. So, yun yung difference na mixed income earner at saka ng purely business or professional income. Additional info, if the gross sales or receipts and other non-operating income exceeds the VAT threshold, the individual shall be subject to the graduated income tax rates for the income from business or practice of profession ng taxpayer. So, ganun. Pagka compensation, always graduated tax rates. Pagka business or practice of profession, tingnan mo muna kung nag-exceed ng threshold. Kung nag-exceed ng threshold, automatic graduated rates. Pag hindi nag-exceed ng threshold, then pag-isipan mo kung pinili ba niya yung 8% option or hindi niya pinili. Pag pinili niya, then ang babayaran na niya lang niya is 8% ng gross sales or receipts and other non-operating income. Hindi mo na ibabawas yung 250,000. Kung hindi naman niya pinili yung 8% rate option, i-add mo sa compensation income, tapos gagamitin mo yung graduated rates. Ganon yung para sa mixed income earner. For the last portion of this recording for the day, I'm going to talk about the income tax rates on certain passive income. But before that, let us first distinguish between final tax and creditable tax or final withholding tax and creditable withholding tax. Pagka sinabing final tax, yung instead na bayaran ka ng for the whole amount ng income mo, may ibabawas na certain percentage depende sa rate na applicable. Tapos, yun na yung ibabayad sa BIR, yung percentage na yun na binawas sa ibabayad sa'yo. Kung wari, interest income yun. 80% lang yung matatanggap mo, yung 20% i-withhold na ni payor. Tapos ibabayad na niya sa BIR. Ngayon, kung creditable withholding tax, ganun pa rin naman yung mangyayari. Babawasan yung magiging proceeds mo kasi i-withhold yung naka-allocate para sa payment ng tax. Pero bibigyan ka ng certificate, ng withholding tax certificate, and pwede mong i-present yon pag nag-file ka ng ITR para maging iyong credit or creditable withholding tax. 'Di ba? Gross income minus deductions is equal to taxable income. Tapos taxable income using the applicable rates minus the tax credits, pwede mong isama yung creditable withholding tax doon. And then which will equal to income tax payable or refundable pa nga minsan kung sobrang dami nung dineduct mo. So, yun yung difference. Pagka passive income, ang applicable dito ay final tax or final withholding tax. For the first one, interest from any currency bank deposit and yield or any other monetary benefit from deposit substitutes and from trust funds and similar arrangements. The tax rate is 20% pagka mga currency bank deposit or dun sa benefits from deposit substitutes. Ito yung sa mga savings account. Kung meron na checking account na nag-earn ng interest, pwede rin. Pero kadalasan talaga savings account yung nag-earn ng interest o kaya yung time deposit or certificate of deposit. Yun yung mga nag-earn ng interest ng mga bank deposits. Next one, interest income received by an individual taxpayer, except a non-resident individual from a depository bank under the expanded foreign currency deposit system. The tax rate is 15% final. So, ano to? Pagka may nabasa kang expanded foreign currency deposit system, yun yung FCDS. Ibig sabihin, yung income na na-earn mo doon, merong final tax na 15% yung interest income. Pero applicable lang ito sa mga resident citizen at resident alien. Pag non-resident citizen at saka non-resident alien, whether engaged or not engaged, ang rate ay wala, 0% dahil sila ay exempted. 15% pagka resident, exempted pagka non-resident. Next one, proceeds of pre-terminated long-term deposit or investment in the form of savings, common or individual trust funds, deposit substitutes, investment management accounts, and other investments evidenced by certificates in such form as prescribed by the Bangko Sentral ng Pilipinas or BSP. The final tax shall be based on the remaining maturity of the investment. Ayan. So, pinag-usapan dito ay yung pre-terminated long-term deposit or investment. Regardless kung savings man yan, common or individual trust funds, and marami pang binanggit, di ba? Pre-terminated, ibig sabihin, hindi pa siya nagmamature, terminate mo na yung kanyang, ibig sabihin, winidraw mo na yung iyong investment or deposit. Hindi pa man matured. Pag sinabi kasing long term, in this case, dapat 5 years or more yung kanyang term. Pagka 5 years or more, yun dapat ay exempted. Pero kung na pre-terminate siya within 4 years but less than 5 years ng term, ang tax rate doon ay 5% final. Kung 3 years but less than 4 years nung terminate yung investment, 12% ang final tax rate. And kung less than 3 years naman nung terminate, 20% ang final tax rate. Okay, let me repeat. Kung 5 years or more, exempted. Kung 4 but less than 5 years, 5%. Kung 3 but less than 4 years, 12%. Kung less than 3 years, 20%. Okay? So next, royalties except royalties on books and other literary works and musical compositions. The final tax rate is 20%. Pagka royalties naman on books and other literary works and musical compositions, they are exempted from passive income tax or final tax. Next one. Sorry. Please ignore mo yung sinabi ko about sa royalties on books. Ganito, ulitin ko na lang. Royalties in general, 20%. Pagka royalties on books and other literary works and musical compositions, 10% lang ang final tax rate instead of 20%. Okay? Sorry. Tapos next, prices, except prices amounting to 10,000 pesos or less, the final tax rate is 20%. Ano naman yung treatment pagka yung prices ay amounting to 10,000 pesos or less? Those are considered as part of the gross income sa computation ng taxable income. Next one, winnings, except Philippine charity sweepstakes and lotto winnings amounting to 10,000 pesos or less, the final tax rate is 20%. Pagka 10,000 pesos or less yung iyong winnings from Philippine charity sweepstakes and lotto, ang treatment doon ay exempted from income tax. And third to the last, cash and property dividends. The final tax rate is 10%. And then, second to the last, capital gains from sale of shares of stock not traded in the stock exchange, 15%. Dati, ang tax rate dito ay 5% for amounts within 100,000. Tapos, 10% pag in excess of 100,000. Ganon. Pero ngayon, isang rate na lang, 15% regardless of amount. Pagka not traded in the stock exchange yung shares of stock na binenta. And lastly, capital gains from sale of real property located in the Philippines. The income tax rate is 6% final tax. So that is all for passive income for individuals.